I still think that we've got more volatility in the near-term future. I think the long term, I think over the next 6 to 12 months, we're going way higher. I still stand by my prediction that this year Bitcoin will go 250K to $1 million. But in the short term, I think this is a scare you out or wear you out market. I fundamentally believe that. And so I expect more volatility. It does not surprise me that Bitcoin was not over 100K forever, that we dipped below it. I think now we're back above it ever so slightly. I expect some more wear you out, some more scare you out. Longer term, Bitcoin's going to the moon. Shorter term, I would personally expect some volatility.
Mallers emphasizes that the $100,000 price point for Bitcoin is a major psychological level. It is not just a number, it is a threshold that will test the conviction of market participants. Markets, he explains, operate in two primary ways. They either scare you out or wear you out. According to Mallers, the next month will bring significant volatility, with Bitcoin potentially trading between $90,000 and $110,000 before making a decisive move.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think this has to do with a strong dollar and liquidity. I've told you guys a million times, 100K is a very big psychological number for Bitcoin. I think it's going to take a second for Bitcoin to firmly rip through and say goodbye to $100,000. Markets either scare you out or wear you out. Markets are not fair. They're ruthless. And I think Bitcoin has been the best example in the most free market at both scaring you out and wearing you out. Scaring you out, what does that mean? A 10%, 20% drop in one night. Oh, it hurts your stomach. You're like, oh my gosh, there goes my net worth. There goes my savings. Should I sell this thing? Is everything I believed in yesterday still true today? And wear you out is when it chops and chops and chops. You're like, man, I thought this thing was supposed to go up. I thought this thing was supposed to buy me my house, my new Lambo. And that's traditionally how markets shake out participants. Traditionally, it's very hard. It takes a lot of conviction, a lot of patience to win the long term in investing, in trading, in saving. And so Bitcoin has been that historically, and I think it will continue to be. So my prediction, take it for what it's worth. By the way, I don't trade Bitcoin. I save Bitcoin. I don't ever speculate. I don't draw lines on charts or anything like that. But take it for what it's worth. Okay. I think the next month or so is going to be extremely volatile. Maybe sometimes to the upside, maybe sometimes to the downside. We've generally kind of chopped between 90,000 and 110,000. This is a wear you out type of scare you out moment. Okay. I've drawn it similar to 2017, where people don't remember the first time Bitcoin ever closed above 2,500 US dollars was in June. It then ended that year, 2017, at 20,000. So in 6 months, it went from 2,000 to 20,000 at 10x in 6 months. I think something similar to that this year. I think it'll be volatile over the next month, this new administration. You've got Jerome Powell and Trump disagreeing. And then I think after Q1, I think we're going to get a weaker dollar. And then I think Bitcoin's going to explode. It'll go between 250,000 to $1 million. I think this new administration is going to bring a lot of volatility. I think that's normal. I think the dollar's way too strong. And I think there's not enough liquidity in the system. What we're going to get from Trump, from the Fed, from both, from any financial authority, from the Treasury, is we're going to get direction on how they plan to weaken the dollar and pump assets. I still think that we've got more volatility in the near-term future. I think the long term, I think over the next 6 to 12 months, we're going way higher. I still stand by my prediction that this year Bitcoin will go 250K to $1 million. But in the short term, I think this is a scare you out or wear you out market. I fundamentally believe that. And so I expect more volatility. It does not surprise me that Bitcoin was not over 100K forever, that we dipped below it. I think now we're back above it ever so slightly. I expect some more wear you out, some more scare you out. Longer term, Bitcoin's going to the moon. Shorter term, I would personally expect some volatility. In my opinion, Bitcoin Strategic Reserve would be one of the most important announcements in U.S. economic history. However, unlike past important economic announcements, this one would be positive, okay? Traditionally, economic announcements in the U.S. have been seizing assets like gold, divorcing from monetary standards and monetary policies, like in 1971 when we left the gold standard to debase and inflate the lives of the public. They've been, like in 2008, bailing out corporations, Wall Street, private businesses at the expense of the people. These are all announcements that are negative. These are all announcements that are against the public, that are against the best interest of the people, okay? They are taxing the individual. They're taxing all of us via inflation, via bailouts, via currency debasement, via asset seizure, right? This announcement would be the opposite with Bitcoin. Here you have an asset and a money that has a monetary policy that cannot be changed, okay? Here you have an asset that was accessible to the people before it was accessible to Wall Street, before it was accessible to governments.
Mallers argues that if the U.S. were to establish a Bitcoin strategic reserve, it would be one of the most significant economic policy moves in history. Unlike past major economic decisions, such as seizing gold, abandoning the gold standard, or bailing out Wall Street, this would be a pro-public, pro-innovation, and pro-growth initiative. Mallers highlights Bitcoin's true decentralization. Even Satoshi Nakamoto, Bitcoin's creator, had to expend energy to mine his first Bitcoin. Everyone who owns Bitcoin today has had to contribute energy, whether through mining, work, or business ventures, to acquire it. This proof-of-work mechanism is what makes Bitcoin the ultimate form of money and a true reserve asset.
Governments own 2, 3, 4% of the Bitcoin network. The Bitcoin network is majority owned by the individuals around the world. It has a monetary policy that no one can change. It is an asset and a network that no one can control. So this financial announcement is pro-jobs, pro-industry, pro-energy, pro-technology, pro-innovation, pro-growth. This addresses the biggest problem we have in the United States of America, which is our deficits, which is our debt. Okay, it addresses some of the biggest initiatives we have in America, which is how do we drive growth? How do we drive economic prosperity? Okay. Also, how do we push American ideals globally, right? You're talking about AI, global warfare, Russia, China. How do we push freedom, inclusion, democracy? How do we push that not just with words, and certainly we don't want war. How do we push that through technology? Bitcoin. So this is a rare announcement that is as important as any economic announcement in the last 100 years in the United States of America. However, it's positive, it's progressive, it acts in the best interest of the public. Now, all of those reasons don't apply to Ripple. Ripple is not a monetary policy that cannot be changed. Ripple is not money that the people and the public had access to first. Ripple printed all of its tokens at once and allocated it to themselves. The way the public gets access to Ripple is they buy it from the company. It is a private business. It is not an open public utility for all. It is not decentralized. It is not distributed. It is not censorship resistant. Ripple is acting as if it is pro-technology, pro-growth, pro-innovation, pro-freedoms, pro-the public, pro-the people. It is not. Private lobbying to the government to support their Ponzi scheme is where you cross my line. I want to be a father. I want to raise my kids in my country. I want to address our fiscal situation, our deficits, our debt. I want to grow. I want to spread democracy, freedom, inclusion, open source technology through the world. The answer is Bitcoin, not Ripple. Listen, Satoshi Nakamoto, the creator of Bitcoin, even had to mine his. Okay. For those that don't know, Bitcoin was distributed through proof of work, through mining, through energy. Satoshi Nakamoto had to give energy to get his first Bitcoin. Even he didn't get any printed and handed to himself. Anyone, let me tell you guys something. Anyone that owns Bitcoin today has had to give energy to get it. I'm going to say that again. Anyone that owns Bitcoin today has had to give energy to get it. Energy is the base layer of money. Okay, it's the currency of the universe. Whether you're Satoshi Nakamoto and you had to mine your first Bitcoins via proof of work, or whether you're Michael Saylor and you had to contribute your life's time, energy, and work to creating a company, creating MicroStrategy. How many hours has Saylor put into his business, put into his craft, put into his profession, put into his employees, his board, his shareholders? Acquiring Bitcoin through energy is not just mining it. We all spend time and energy every day to contribute value to this world. And in return for that, we get money. And Bitcoin is the best money, the world's money, the future world reserve currency. And everyone that owns Bitcoin right now, whether you mined it or not, had to produce valuable energy to get it. That is not true for altcoins, for Ripple. There's a select group of people at a private company that did nothing but print it for themselves. That is not contributing energy to society, value to the world. That is the difference. Whether you're producing valuable energy by founding a company, mowing someone's lawn, creating a business, or mining. So this is classic lobbying.
Jack Mallers delivers an unfiltered, passionate analysis of the current Bitcoin market, emphasizing that while the short term may bring volatility, the long-term trajectory remains overwhelmingly bullish. He predicts that Bitcoin will surge to between $250,000 and $1 million within the next year, driven by macroeconomic factors, institutional adoption, and the weakening dollar. Mallers also underscores the significance of a Bitcoin strategic reserve as a potential landmark economic policy decision that would benefit the public rather than the elite.